Ever wondered how to invest in real estate without having piles of cash in the bank? You're not alone. The idea of owning property might seem impossible if you're short on funds, but what if I told you there are ways to break into real estate with little or no money at all? In this video, we'll dive into some practical, creative strategies to start your real estate journey. No big bank account required. Number 1. Purchase money mortgage. Seller financing. One of the most effective ways to invest in real estate without a large sum of money up front is through seller financing. Imagine you've found the perfect property but can't get a loan from the bank. That's where seller financing steps in. In a traditional real estate deal, the buyer pays the seller in full, often with a loan from a bank. But with purchase money mortgage, the seller acts like the bank, financing the deal themselves. Here's how it works. Instead of paying the full price up front, you enter into an agreement with the seller to pay over time. The seller gives you the title to the property, but instead of sending money to a bank, you send it to the seller in monthly payments. This option can be a game changer if you don't qualify for traditional loans, but make sure to read the contract carefully and understand the terms. Number 2. Lease option. Another great way to invest in real estate without much cash is through a lease option. Here's how it works. You rent a property with the option to buy it later. But this isn't just any rental agreement. The rent you pay includes a little extra, which gets applied toward the purchase price if you decide to buy. For example, let's say you're paying $1,200 in rent, but $200 of that goes toward your eventual purchase of the property. Over time, that can really add up. The lease option gives you a chance to test drive the property, and at the same time, you're building up some credit toward ownership. It's a great option for those who don't have the cash for a down payment but want to start building equity. Number 3. Hard money loans. If you're looking for quick financing but don't have the credit to get a traditional loan, consider a hard money loan. Instead of borrowing from a bank, hard money lenders are individuals or small groups willing to loan you the funds. These loans come with less red tape and faster approval. However, there's a catch. Hard money loans often come with high interest rates because they are riskier for the lender. You'll also need to cover upfront costs, like appraisal fees and closing costs. While the loan term is short, usually about 12 months, it's a great way to get fast access to funds to close a deal quickly. Number 4. Microloans. Microloans are a great option for people who want to invest in real estate but don't have a lot of money up front. These loans are usually smaller than traditional bank loans and are designed for startups or new businesses looking to grow. What makes microloans appealing is that they have fewer qualification requirements, meaning that even with a lower credit score, you might still get approved. Microloans typically come with shorter repayment terms, making them a faster way to get your foot in the door of real estate investing. While the loan amounts are small, they're enough to cover initial costs like renovations, down payments, or even purchasing smaller properties. If you're just getting started and need a manageable amount of money to invest, a microloan can be an ideal solution for real estate, especially if you're exploring smaller-scale opportunities. Number 5. Forming partnerships. If you don't have the funds to invest on your own, why not bring in a partner? A real estate partnership is a common strategy when people don't have enough money to buy a property by themselves. You could find someone who's willing to invest the capital while you handle the day-to-day operations or manage the property. There are many ways to structure a partnership so both parties benefit. You could agree to split profits equally, or maybe the investor takes a larger share for putting up most of the money. Make sure to draft a solid agreement and have clear expectations so everyone's on the same page. Number 6. Home equity loans. A home equity loan allows you to borrow money against the equity you've built in your home. If you already own a property, this can be a smart way to fund a real estate investment with little to no out-of-pocket costs. Essentially, you're using the value of your current home to secure a loan that can be used for another property purchase. Many banks and financial institutions offer products like home equity lines of credit, HELOC, or home equity installment loans. HELOCs work like credit cards, where you can borrow money as needed, whereas installment loans give you a lump sum. Both options allow you to tap into the equity you've accumulated in your primary residence, giving you more cash to invest without selling your home. Just keep in mind that you're putting your current home as collateral, so it's important to be cautious with this method. Number 7. Trading houses. Yes, you read that right. You can trade houses. This method allows you to swap your current property for another, potentially more valuable. 1. This helps you avoid the taxes and fees that typically come with selling a property. You also save money by not having to pay capital gains taxes that would normally apply when selling a home. Trading houses can be a smart move if you're looking to upgrade without having to spend a lot of money. It's also an excellent way to avoid hefty closing costs and fees that typically come with selling and buying properties. Number 8. Special U.S. government schemes, USDA loans. Another lesser-known option is taking advantage of government programs, like USDA loans, which are available for homes in rural and some suburban areas. These loans require little to no down payment and are designed to help people with low or moderate incomes buy homes. To qualify, the property needs to be in a USDA-eligible area, and you must meet certain income requirements. USDA loans are a fantastic way to own property in less populated areas with little money down. Number 9. SBA loans for commercial real estate. If you're more interested in commercial real estate, then SBA loans might be your best bet. The Small Business Administration offers SBA 504 loans for small business owners looking to buy or improve commercial real estate. These loans are attractive because they require only a 10% down payment, making them accessible even if you don't have much capital up front. You can use these loans to buy a building, renovate an existing one, or even finance new construction. It's a great way to enter the commercial real estate space without needing a large sum of money right away. Number 10. Real Estate Investment Trusts, REITs. If you want to invest in real estate but don't want to deal with the hassle of managing a property, real estate investment trusts, REITs, are a fantastic option. A REIT allows you to buy shares in real estate projects, similar to buying stocks. This means you can invest in large-scale properties like shopping malls, office buildings, or hospitals without having to physically own or manage them. The beauty of REITs is that they offer the benefits of real estate investing with the convenience of stock investing. You can buy and sell shares easily, and you're not responsible for any property management. While REITs come with some administrative fees, they are an excellent way to diversify your portfolio and get into real estate without owning property directly. Real estate investing doesn't always require a huge down payment or perfect credit score. Whether you're using seller financing, microloans, or government schemes, there's a method that can work for you. If you found this video helpful, don't forget to like and subscribe to our channel for more tips on making smart investments with little money. Thanks for watching, and we will see you in our next video.